Good morning. Welcome to the morning market briefing. Today is Friday, February 6, 2026. And a very wise man yesterday said it's a great day because 2626. So for those of you who like numbers, it's a great day for you. It's not a great day for Amazon shareholders, unfortunately. And we are a shareholder of Amazon. And the reason is they thought that they could do something that Meta didn't do, that Microsoft didn't do, that Alphabet didn't do, and that is not spend $100 billion, not spend $150, not spend $180 billion this year on CapEx, but $200 billion, almost as much money as we've taken in tariffs this year.
Crazy. I mean, when the numbers officially, right when they came out, I was like, man, Amazon crushed it this quarter. It's like,
and they did.
Boom, 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 and like all the numbers are great. As they were for Google, as they were for a lot of companies. But the unfortunate part is that CapEx number came in at $200 billion, which is just an absurd amount of money. I mean, it's orders of magnitude larger than. I mean, what's the most a company has ever spent in CapEx in a single calendar year in the history of the world? I mean, it's kind of hard to know. Whatever they spent building the pyramids was probably pretty high on a CapEx, but adjusted for inflation, but.
Trump would say the Panama Canal.
Yeah, the Panama Canal was pretty expensive. Not even including the human lives involved, the plague of malaria, cave-ins, But this is insane. We're on pace for $1 trillion in CapEx across just a handful of companies, which, just in the magnitude of spending. Just in general is so big. I'm going to do a quick grok while you fill in some details, like how many countries it would take to have $1 trillion in GDP.
Yeah. It is remarkable, and it's going to boost GDP results, obviously, for this year, and it's going to look good from an economic growth perspective. But as we've talked about, and you'll see in the market memo today, if you don't have access to the market memo, do send us an email. We can get you added to the list. That's a quick summary of what we're seeing in markets every week. That's kind of a distillation of this call. But what you'll see there is just kind of this, an analysis of they've got to make money on this at some point. And I think that until they can demonstrate some good return on investment, I think it's going to be difficult to do. They grew 24% in Amazon Web Services this quarter. But when your CapEx is going up by 100%, a lot of analysts would say, how are we getting some return on investment on that? And I think that they have some good thoughts there. These are companies that generate the most free cash flow in the history of the world, especially if you add Apple into that mix. And yet they're spending all of that free cash flow on CapEx now. And so that means fewer share repurchases. That means you're not going to have big dividend increases. It also means that you're probably not going to see as much M&A. And you could even go into a net debt position. Meta talked about potentially going into a net debt position. So this is fascinating, and you're going to see economic growth expand as this cash is put to work. But what you might also see is unemployment go up. And we've already begun to see that. January was a pretty strong month in terms of layoffs announcements, according to the Challenger job cuts. And so we're continuing to see this K-shaped economy where economic growth looks good, but employment is not so good. So it'll be interesting to see how the Federal Reserve assesses that. I know the expectation even before Jay Powell leaves is that now it's a non-zero chance that they cut rates again in March. So I think that's something interesting to watch. Howard Marks spoke in Atlanta last night at the Georgia Aquarium to the CFA Society of Atlanta. And I thought he's always a really good listen. And he's a famed investor, started Oaktree. He was actually in equity markets for 8 years. And then since that time, he's been in bond markets, specifically in distressed debt. And it's a little bit odd. And he talked a little bit about this, about his career progression, because you wouldn't see someone who's so famously risk averse as Howard Marks be in distressed debt, dealing with bankruptcies or companies that are about to go into bankruptcy. But in his opinion, he is actually very well suited to this, because if anyone is going to find some hair on something, it's him. And so what he wants to do is he wants to reduce the number of losers in the portfolio. And he's like, the winners will take care of themselves. That's how you generate alpha. You can either generate alpha from having more winners or from fewer losers. And he says his particular style is suited to having fewer losers. And in credit, specifically in distressed debt, that's the perfect skill set to have.
Yeah, I've often said that Howard Marks is my personal spirit animal, because he's not a numbers guy. He's not a, really in the details, boring you with just the finer parts of discounted cash flows and modeling. He really is a broad strokes guy. And he is the first person I encountered reading, about investing that got me into the idea of probabilistic outcomes, which we talk a lot about on this call, which is, if you buy a stock at a certain price, the real goal is to think, what's the probability that I'm going to make money versus lose money? And you want to buy more stocks where that bell curve is in your favor. And bonds are the same way, especially because you can know those probabilistic outcomes right away when you buy them. And we've talked a lot about that with buying the long bond right now. The probabilistic outcomes are so much more in your favor right now with the long bond than they have been in the past, and that gives you so much cover. I'm sorry I missed it, but man, he's one of those guys where he just puts out the very basic stuff. I would point everybody, if you want to read a book about investing, the most important thing is a really, really good book for just resetting you on the basics. And if you want to get a little bit more in the weeds, the Understanding Market Cycles is another excellent book.
He also just released a collection of his 45 favorite memos.
Oh, yeah. He also is extremely self-referential. He could probably not write any new memos. He could just ask ChatGPT to reference himself in the style of Howard Marks, because half of his memos are just clips of things he's already written in the past. But, just super interesting guy. Big fan of the crystal glasses. He always wears the see-through frames. He's been a big proponent of that for probably 15 years. He was early on it, and now I think he's holding on to it longer than most people do with the frames, but it is his look. So quick follow-up. I did ask Grok. First of all, there are 20 countries, if you include the projection for Poland this year, that will have $1 trillion or more in GDP. And the number of countries it estimates that would have to be added up starting from the bottom to accumulate $1 trillion in GDP is between 125 and 150 countries. So you can either say the bottom 150 or Poland maybe this year, and you would have $1 trillion in GDP. That's just how insane the amount of money that these 4 or 5 companies are spending or are expected to spend in 2026.
That's incredible.
It's just orders of magnitude. But the thing is, 150 countries would be 1 trillion, and we're projected to be somewhere between 30.5 and 31 trillion in the United States this year. And China's a distant second at 19.
Allegedly,
yeah, based on the numbers that they give, which are often pretty suspect. But I would say, if you look around population-wise, the UK continues to punch well above their weight at $4 trillion. The population is significantly smaller. And they're above France, which has a much bigger population. So pretty interesting. Spain, despite everyone saying that country stinks at economics, high on the list.
Switzerland probably.
Yeah, Switzerland is
per population.
Not included. Yeah, so they're not in a trillion, but they're probably pretty high. But as of last year, final GDP numbers, Saudi Arabia was the cutoff at 1.27, and Poland would be the next man up, expected in 2026. So,
wow,
pretty interesting.
That's remarkable. Howard Marks did talk about he referenced a previous memo called "Is It a Bubble?" that was written last summer, and he was talking exactly about this. And he said, "Look, in the 1800s." People generally thought it was a good idea to connect the East Coast and the West Coast with a railroad. So 6 companies did it. The problem was You only needed one. So you got this massive societal benefit. You now had 6 railroads, extremely low cost, connecting east and west, but all those companies couldn't make money. And so he likened that to kind of the pure definition of a bubble. You know, all of this money going into something with a lack of return on investment. And it was a perfect segue to the next question. And the question was, well, we just had an announcement after hours, about an hour ago, that Amazon's going to spend $200 billion this year. And Howard Marks kind of paused, as he does, and waited and told a little bit of a story, and then proceeded to say, look, these are the best companies I've ever seen. These companies they're not going to go bankrupt. It may be value destructive for them. They may not make a great return on this investment. But what they will do is that they're going to shut out any other potential competitor who's even trying to get into the space. I mean, look at the potential competitor for Grok. Grok, which is they're trying to build their own AI. The entire company of XAI is valued at $250 billion. They could spend their entire valuation on CapEx this year and just about be where Amazon is in terms of its spending. And that's a big company with the richest man in the world at the helm. I mean, can you imagine if you had some sharp individuals get together and have a team and really have a great invention for AI? There's no way they can even try to compete with an Amazon or a Microsoft or a Meta spending that type of money. And so from that perspective, I think that they're just basically trying to shut down any potential competition. And I think that that's something I hadn't thought about, but it's a interesting perspective.
It's a couple of thoughts. The first would be the irony of that whole situation is that when I was in high school, I had an economics teacher, shout out Coach Crockett, and he basically said when it comes to scale, it would be impossible to start a new company that built cars. That was his at the time. It was like, how are you ever going to be like, I'm going to start a company, I'm going to build a car? Like, you're so far behind GM and Ford and all these things. And the irony is the richest man in the world did that and created a new car company, a completely different type of car, and has accumulated an enormous amount of wealth, which is maybe to show that if you could do it, it would be one of the most profitable ventures on the planet, but it would be so difficult to do. And it's, I guess, credit to Elon Musk for doing that. But he started out with that PayPal money, that sweet, sweet PayPal money, of which all of the evil billionaires allegedly have, like Peter Thiel. The second piece is interesting because the railroad thing is interesting because, you know, having 6 of them and not needing 6, you really only needed 1. I mean, if you look at the names of all of the major railroad companies, they're all an amalgamation of a bunch of old railroad companies like BNSF, Burlington Northern, Santa Fe. Guess where all those different places were going? You know, all those different rail lines were going. I mean, they moved them all together. Union Pacific was Union Pacific, Western Pacific, and Missouri Pacific. Norfolk Southern was Southern Railroad and Norfolk and Western. You know, I mean, they put them all together, and like you don't really think about that in the modern age, but you know, you look at all those railroad companies, and they all have ridiculous names. Kansas City Southern, you know, which is now part of Canadian Pacific. You know, they're all just locations because that's where the railroads ran, and so they had to have that consolidation in order for them to be profitable because it was a new venture. So the question is, are these eventually going to compete themselves into having to merge? I mean, the same thing happened with PayPal and X.com, which was they created online payments. They competed aggressively against each other to the point where they're both about to go bankrupt. And Peter Thiel and Elon Musk joined forces. They dropped X.com. Now it's back. No big deal. Many years later, but they created the online payments. They merged under PayPal. They sold that and merged into eBay and made a ton of money, and then went on to do other things.
Well, you look at it with, and I think other companies have tried to do that, but you got to commit to it.
Yeah.
Zillow buying Trulia.
Yep.
Or Redfin and Realtor.com and kind of merging. These are all instances of where they're trying to, guys, what are we doing here? We're just wasting money. But you got to commit to it.
And that's why CoStar is having such a hard time getting Homes.com off the ground, because people already assume, like Zestimate is, people go to Zillow. They just go to Zillow. It's become the Kleenex of online listing services. It just is, and it's so hard to Kleenex. There will never be a new, I guess, facial tissue is what they call it, that's going to overtake Kleenex as it's the Oreo. There's.
I mean, when you got that list, like for elementary school or middle school, about what you had to bring into class, and it was a pack of Kleenex.
Yeah, it was not a pack of facial tissue.
Exactly.
Yeah. So it's just, that's the way this is going to end up. And some of these companies are going to spend themselves into mediocrity. They're going to spend a ton of money. They're not going to have the best technology, and they'll become Intel, because Intel was the top of the heap, and they failed to innovate. And now NVIDIA is the top of the heap, in terms of semiconductors. But when I was in middle school, Intel, like everyone's like, oh my gosh, you got to get a Gateway and get an Intel chip in it. But nobody talks about Gateway or Dell at all anymore. But those were the big computer companies, and they failed to innovate, and they've been relegated to the trash pile of history. And so that's where we are right now, is that we don't know which one of these companies is not going to do it, but they're going to spend like hell to get there, and eventually we'll figure out what it is. But in the meantime, these stocks are going to be punished for, spending basically 50 cents of every dollar they make, and they make a lot of dollars.
And that's not profit; that's revenue.
Revenue, yeah. They're making an enormous amount of money, and that's a piece too. Is that these are cash flow machines. To the degree we've never seen before in history. 150 countries worth, of spending, and that's half what they made this year. So,
and I'd contrast that to, I do think there's a parallel here about the big rush into electric vehicles, and how all of the companies just kind of got this emotional response. We have to go into electric vehicles. We have to go into batteries, all of this. And then they ended up just blowing themselves up. Ford taking a $19.5 billion charge, GM taking a $6 billion charge, Stellantis, the parent company of Jeep, taking a $4 or $5 billion charge last year. Well, the difference here, though, is today we have an announcement from Stellantis that they're taking a $26 billion charge and canning some of their electric vehicles, including the Ram 1500 EV and the Jeep Wrangler 4xe. $26 billion charge. You know what their market cap was at the close of business yesterday?
30 bill.
27.
Yo.
Imagine just taking a charge that is the same as your market cap. And the fact of the matter is, with a market cap of $2 or $3 trillion, Meta and Microsoft and all these guys are not going to be taking charges that are equivalent to their market cap. No. And that's the difference between what they're doing and what like some of these electric vehicle companies did.
It's crazy. And think about that. Like, that sounds like a massive charge, $26 billion. That's
10% of this year's spending for Amazon.
That's half of what Google made on YouTube last quarter. Less than half. They made, what, $60 billion? And they made $26 billion loss for Stellantis. It's crazy. It's crazy to think about the scale. We're entering this era of just massive, massive numbers.
It's unbelievable. Bitcoin was blasted again. I think it got down all the way down to 60,000 last night, maybe 61,000. Just absolutely shellacked. That topped out at what, 125? So
I would point everyone to our YouTube. We have a short on there where a very wise man on December 17th, 2024, made some comments about Bitcoin when it was $117 per coin, and how it's not really an investment vehicle. I would encourage you to go watch that many, many times.
I would say, the glee with which I am now finally seeing in financial circles about Bitcoin getting smashed makes me think that this might be a decent entry point.
They say it's like a 4 sigma downside move in the history of the pricing of Bitcoin.
I'm not a Bitcoin investor. I'm not, and I don't have any plans to. But if I was ever to, I would consider taking a position now. So I'm probably going to be wrong about that, just like I was on gold. So
you did say you wouldn't buy gold last week, and then it fell 30% in the next 2 days. So that was pretty on the nose.
All right, Tom. We'll look forward to next week, but I want to look forward to Sunday night. Give give some thoughts on the Seahawks-Patriots game, the Super Bowl rematch of Super Bowl 49, and the Seattle trying to go 2-2 in Super Bowl history.
I mean, they've won 100% of the time. We've gotten a new pope in the 20th and 21st century. So we got a new pope within the season, and so odds are good based on a high correlation there. In fact, it's a correlation of 1 for the Seahawks. Not to quote Tom Brady, who I'm not a big fan of, but I don't really have a dog in this fight. I would say the closest dog I have in this fight is the Seahawks head coach went to Centennial, which is one of the other high schools in Roswell. So that'd be my big affinity in this game. I do like Mike Vrabel, though. He's a dog. He's a real man, which I appreciate. I think if I had to pick, I'd probably take New England with the points, because the Patriots culture is still there. They don't lose games just because they don't make huge mistakes. I think that they may not win, but I think they'll cover. I think it's going to be a tight game.
What's the line? Is it 4?
It was 4.5 last I saw, which seems high. But I mean, I think it's likely the Seahawks win. I mean, they're big on explosive plays. They've got a great defense. I mean, New England has a great defense as well, but I mean, they don't have Jackson Smith and Jigba. The guy is an absolute animal. So.
Offensive Player of the Year. Mike McDonald, interestingly, also born in Massachusetts, as I was. Obviously, big fan of Seattle sports, as I am, and lived in Georgia, as I do. So, it's kind of the crazy thing about Mike McDonald is he's only 3 years older than me.
Yeah. So
like Sean McVay, he's just kind of a freak. Like, he's almost like from another planet.
I played against Sean McVay in high school. We are the same age. I know people who are very close to him, which is wild.
I mean, he's like the guy. He's central casting for an evil guy in an Avengers movie, I think.
Yeah. Well, he's on the record as saying he got PRP, platelet replacement. I forget what the second P stands for, which is the hair injections that famous people get that regrow their hair, where they take your blood out, they put it in a centrifuge, and then they inject the platelets under your scalp. That's how people like Elton John and Jeremy Piven have full heads of hair now. But he's on the record as saying he got it in his face so he could have a tight beard, which I think is one of the least manly things you can do. Having a beard, that's cool. Having a beard that involves having your own blood injected under your face skin so that you can grow a tight one, go with what you got. A lot of people can only grow unbelievable mustaches, and I think you need to be you.
LA is a weird place, man. Yeah. And it attracts oddities. And I think the culture kind of is reflexive on that. Howard Marks also talked about reflexive.
Yeah, you kind of have to be. I mean, it's the land of beautiful people, and if you're, I don't know how tall Sean McVay is, 5'5", and you can't grow a beard, you gotta exhibit your masculinity in the best way you can, but I don't know if getting injections in your face is the way to do it.
I'm all in Seahawks. I'm big fan this weekend. I used to kind of also, I do have an affinity for the Patriots, having some family up there and stuff, but and been born up there, but I'm definitely big on the Seahawks this time, and I'm really hoping we get a big win.
I mean, Drew Bledsoe was my favorite quarterback when I was a child, and then he was unfortunately market corrected by my least favorite quarterback of all time. And as a big Peyton Manning guy, who I think it was more of a natural quarterback than Tom Brady. I think Tom Brady is wildly overrated. I would again point you to the book Football by Chuck Klosterman, which has a detailed analysis on who the GOAT actually is, and the conclusion is that it's Jim Thorpe followed closely by Jim Brown, and that Tom Brady is a product of the film study era. So his greatness is greatly improved by the modern technology around the game and nutrition versus actual true natural skill. So I would point you to that, but I think he's overrated. He's won a lot of championships, but it's a team sport, not an individual. He's the most decorated, certainly, but is he the best? I'd argue no.
Well, I mean, when you're rated as the best of all time, like you're either rated fairly or overrated. Like there's it's an asymmetric bet.
Yeah, he's most decorated of all time. He's the M-dote, whatever that means. So that's my opinion on that.
All right, we'll see what happens this weekend, and we'll catch you again on Monday morning at 8:30. Like and subscribe. We'll see you on Monday. Bye.